Hello everybody. This one's going to be quite a long session because it's about financing a property. So I just want to start off with saying that you need to be a salaried employee if you're listening to this course, and it's quite a big financial commitment. So if you've already bought a property, then you know the expenses, but if this is your first time property, then I need to let you know that there are quite a lot of big expenses in the beginning, and then there's also further maintenance costs and stuff like that afterwards. So let's start off by saying you need to sort out your own monthly budget, again about 6 months before you decide that you're wanting to buy a property. So what this means is you need to just basically print off your finance statements from your bank 6 months previous and look at every single place where your money comes in and your money goes out, because that is exactly what the bank's going to do to you and for you. So that's where you need to start. Now this, I'm not going to lie, is not my forte. Like, I'm not great at admin, and I certainly am not great at looking at my expenses and my income, but you need to put yourself in the banker's shoes. They are taking a risk on you, and they need to know everything about you that they can. So just to have written down a couple of upfront, what I call pain in the neck costs that you need to have before you move in. First of all, if you're getting your finance from a bank, like I said, I'm assuming you are, you have the bank initiation fee. They just decide to give you an initiation fee because why not? So you got a bank initiation fee. It's about 6,000 Rand as at this time of recording, and we're recording in August 2018. Then you have to pay for the transfer of duty, or the transfer duty for your property. So again, in 2018 in August, if you have a property over 900,000, you have to pay this, and then it obviously works on a sliding scale. So the more expensive your property is, the more transfer the more transfer duty you're going to pay, and it goes basically between 3% and 7% of the value of the property. If you buy a property under 900,000, you don't have to pay transfer duty. Yahoo! So if you're first starting out and you're wanting to buy a property, then I would do that. I'd find that property somewhere in South Africa that's under 900,000. Then you have to pay the attorney transfer fee, which basically is from the seller to the buyer. So they are the people who deal with that. You have to pay the attorney registration fees because they go and do all the paperwork behind it all, and they transfer the bond on your behalf. So they do all that admin. And then you have something called the deeds office, which is basically your stamp duty and your postage fees and stuff like that. So those are the pain in the neck cost fees up front, and they cost a lot of money. They're a lot of money, so you either need to have saved up a lot of money or borrow from your parents or go in with a friend. You know, if you aren't in the position to put some money down, we haven't even talked about getting like 100% bond. If you aren't in the position to put some money down, then you need to wait until you get into that position. Now, some people prefer going into the bank and sorting this out and seeing how much they can borrow, and some people prefer to just do it online. Now, some banks offer an immediate, we'll tell you how much you can look for a house for. They'll give you an instant bond calculator. There's a couple of different ones you can look at. But personally, I actually like to go in to the bank and talk to a human being, because I find that actually if you talk to someone, then they trust you more, and they can, you know, they can explain things to you. You had no clue, if this is your first time, what you're doing. It's actually nice to go and talk to the banker. So you book an appointment and you talk to a banker. You have your after you've moved costs. So if you are buying in a complex, which is generally, like I said, my strategy in South Africa, you normally are going to be paying levies, especially if it's as part of a sectional title. So everyone who owns a property in the complex will be paying levies. You also are going to be paying rates and taxes to the municipality. You've got your, which is like, you know, your water and everything, your electricity. You've got, if you've got a pool, if you've got a garden, you've got a gardening service. Sometimes complexes come with that already. And then there's actually just the cost of moving from your property to another person's to the property you're buying. And just those costs, those moving costs, it depends how much you've got, obviously, but that actually is an unforeseen cost, and it's a pain in the neck. It's not the original pain in the neck cost, but it is a pain in the neck. It's costs that you just don't want to be giving. Okay, so assuming that you're going to the bank and you are wanting to apply for a bond. Like I say, you can go online first and look up instant bond calculator. What you need to know is you need to be aware of your own figures. So what is coming in every month? What is your income? That's not necessarily just your salaried income. It can be anything. It can be your maintenance if you are a single parent. It can be your commission if you're a salesperson. They will also ask you, like, does your company pay for any fringe benefits, like car allowance or maybe cell phone allowance, mobile allowance? Any income that you get from maybe rental properties. All of this income you then declare as income, money coming in. And then you've got your expenses, which is all your money going out. And there are a lot of hidden expenses that we forget to put in here, and you only really see them when you are looking at your bank statements to study it. So there's the obvious costs, obviously, of if you've got kids, school fees, food, transport, cars, car insurance, household insurance, the expenses just never end. But what you must take consideration of is if you're paying rent, then that rent you will obviously be paying into your bond or your mortgage. So that expense will no longer be there, but they'll calculate it in terms of what they can say they'll eventually lend you. So what you do is you list all your expenses and all your income, and they'll probably ask you for your bank statements or your IRP5 if you're in South Africa for the last 3 months. And they'll then determine your credit worthiness. If you currently own a property, obviously they're going to look at the value of that current property as collateral and how much you've paid off it to see how much further money you can have. Then they'll come to you with an offer and they'll say, okay, we'll let you have, say, R1 million, and we're going to give it to you at this interest rate. Now, the interest rate is normally determined on how risky you are and what other assets you've got, and what they can use as collateral. Say you fail to pay your bond in 1 month or 2 months. So always put yourself in the bank's shoes. Like, what if you were the banker, would you lend yourself? So I always would say, make it as easy as you possibly can for, if you're going to an estate agent, for the estate agent and for the banker. Give them everything they want immediately. Like, be that person who is professional and gives the documents immediately. I tell you, it makes a big difference. But obviously, they're going to make you an offer and they're going to say it's going to be this much interest, and then you have to either accept that or you decline the offer. But this is when you'll be able to ask them all the questions around what the offer is, and obviously it's going to relate to prime, and prime in South Africa is now 10%. So. Yeah, that's what you're going to do next. Okay, then what the bank will probably do is they will have the property usually on their records, and they will look at the value of the property. Okay, so for some reason the video just stopped working. So what I would say is you need to try and get to know your banker personally, and that they will do an evaluation on the property that you're wanting to buy, and they'll see what the property is worth. Now, like I say, the book value and the actual value of the property might be a bit different, but it's good to know because the seller will obviously ask for a certain price. Try and determine what risk you are to the bank. Always put yourself in the banker's shoes. So here's some tips. If possible, get to know your banker personally. If possible, try and get friends to buy with you in the beginning, or family. Someone who you don't mind going into a relationship with, a covenant with, an agreement, and it's all written out in black and white. We've spoken about the initial cost and the maintenance cost, but we haven't spoken about the actual bond or mortgage and the amount that they'll lend you. So a lot of banks obviously want a deposit, and depending on how risky you are and the assets you have and the kind of property you're buying, they will want a deposit of potentially up to 20%. They might only want 5%. You're very lucky if you get a 100% bond mortgage. I'm calling it bond mortgage so that people in the UK, if they're watching, they know it's a mortgage. Here in South Africa, it's a bond. So, I mean, to be honest, most banks will probably offer 80% and they want you to put down 20%. Obviously, look at if it's a buyer's market or if it's a seller's market. Are the banks wanting to lend money? Are they needing that? And then obviously they're going to give you a higher bond, like they'll give you 90% bond with only a 10% deposit, if that's what the banks are needing to do in order to get people to get a home loan from them. Okay, loans. I'm not a fan of a loan, but let's be honest, we don't all have cash just lying around. So if there is another way that you can finance your property and it doesn't have as higher interest rates, then I mean, do that if you can. So the one last point I want to just make is my motto in life is you don't ask if you don't get. So you can always just try. I mean, I tried to ask my bank and they said that the bond would be over. This last one I've just asked them now for. They said a bond is over 25 years, and I know that you can also get potentially bonds over 30 years, but maybe I'm too old for that. So you might, if you're very young, you might be able to get a bond over 30 years, which means your repayments will be less each month, and it might help you out a lot more in the beginning. There are some properties where, and then this comes to your strategy, you're able to make money almost immediately. That's if you're needing the cash in straight away. Or there'll be other properties that have more capital growth, so it's more of a long-term investment before you get your money back. And you may have to put in money each month into the property. And I'm not just talking about into the bond, I'm talking about you'll be paying the levies and you'll be paying the rates on behalf of your tenants. So you've got to take that into account if you are buying a buy-to-let property, essentially. Okay, so the questions for you today are: go to an instant bond indicator on the internet and see what you would be able to apply for. So see how much money you would be able to get. I'm not going to recommend one here because I'm not affiliated to any of them. Number 2, work out your disposable income every month. Number 3, see where you've got a deposit. How much saving have you got? Just write this down somewhere. You're going to need to know it. Number 4, how risky are you and what are your goals essentially in this all? Number 5, how much cash do you have available now? What is in your hand right now? What can you do right now? Okay, that's the end of the finance section. And like I said, there's other ways to finance property. I'm assuming that you're wanting to borrow money from the bank. Okay, cheers.